Okay. So today has been super interesting. Uh, we've had a lot of stuff go on today. I think there's a lot of things in play in and out of the market that are going to be important to understand what's going on. But for right now, let's just really quick, um, let's see, turn that on. We had well, that's too dark. I need a different, a little lighter. Okay, we had a multi-day decay retest right here. There's the orders, here's our volume, and pushing down into the stops, trapped orders, we had open interest theft, the OIT, and that open interest theft had trapped orders on it. We get a little bit of some new highs coming in, and now we're getting some more new highs and moving up. So right now, that's where we're going. Let's talk about how we got here. The very first thing that I want to talk about, and I'm gonna try and point this out at the beginning of these streams because I think it's very important that you understand. One, that when you're looking for liquidity is first you get a signal, something that's repeatable, it's measurable, we can see it over and over and over. Two, you see that signal generate volume of those who chase the signal. And three, we see the institution trade against the volume. They trade against the volume, not the signal. If you're an institution, you're not interested, or do you care how they generate the volume? You're just interested in the volume. So the signal in our case is velocity or decay crossing over zero or tension, but when tension does it, it's a little more, it's a little bit different. Then we see the trapped orders bring in the volume. Here's volume, here's volume. And then we look for the institutional impact, which is hitting tension. If they hit price and price moves, that's good-ish, depending on the way that things are built, but you want to see them impact tension. So that's how you know that they consumed that volume as liquidity and they took a position market wide and are moving things, okay? That's the structure. All right, so the first thing to go over, of course, in this, where were we yesterday into the close? We had a big, right here from the daily zero test, we had a position come in, and the intent here was to get things up and liquidate these guys, some positions from the previous day all the way up to, and I got to toot my own horn a little bit. It went right to 31.45 to the tick. So that was kind of cool. It's not necessary. It doesn't mean anything. If anything, that was likely just coincidental. But I think what happened was that that bullish position pushed the market up, and their whole goal was just to liquidate all those bearish positions along the way, all the way up. And we got everything we wanted. It moved up just basically straight up all night, just moved, no pressure if you were able to hop in here. There was a little bit of pressure, but it worked pretty good. So we moved up, we liquidated all those positions, so the bears got wiped out of the market. That's where we were. Right at the open today, this is important, we had a zero test from below. So this came up and gave us that zero test. And this zero test was this is sampling the bears. The bears got a chance to say, do we want this right off the open? And look, we had trapped orders. It moved down. The bears really wanted it, and they hit right there. So that zero test played out. It pushed down, and decay moved under. We had trapped orders, and the bulls, they impacted tension, but it didn't quite work out. They didn't really hit price very well. And tension gets up. We have another zero test right here. And again, we get trapped orders coming in, and the bears use that to continue moving price in their favor. This bullish position gets turned upside down. It's important that you know that this position right here, they hit. They did move price a little bit, but they were unable to capitalize on taking out that bearish zero test right at the open, and the market folded them over hard. The bears were aggressive. They came in and they defended the zero test twice, and those were the only ways that you could have picked up on this whole scenario. You would have had to piece this all together, and I think about here, you realize that the bears were defending their zero test and the bulls were underwater and they were struggling. And the market was going to look to liquidate them somewhere down here, and it's really sort of difficult to figure out exactly where they would be at, but I'd put about here. And you could see where that they finally did cave. I think there was a pushback here a little bit, but right there, this just wrecked the bulls off the open. And that's important because it tells you the character of the market. Hey, let me finish up here. So when the bulls get pushed out, the bears are going to get motivated. And their very first thing they want to do is the same thing they always wanted to do. It's the same thing they wanted here and here and here and here and here. They want to get daily tension down under zero. And look at this. All of this fight, this kick, this scream, and it's back to zero. They're having a hard time. The bears are having hard. They're getting everything they wanted. But this looks to me like they're having sort of a difficult time making. I mean, if we had seen this push under and we had this, it was obviously switching under. Maybe let's find a spot where it looks, it was switching under. Yeah, right. See, it switched and it stayed. Oh, hi.
Hi.
And then we could say, okay, they're doing a great job. But in this instance, I mean, it's sort of it. You see that right there? They pushed under, just couldn't get it to stay. It was because the bulls weren't done. And then finally they got it to go under. And it takes some doing to get it done. But right now, it's back up to zero. And it's already back over. So this is now a zero test from below a little bit. So, I mean, you can see it was under. And now we're getting a zero test from below. Are the bears going to pick this up? Are the bears going to defend? Are the bears going to defend this daily tension right now? We have bulls who did show up this morning but got folded over. It wasn't great, but they were here. They got folded over. X that out. The bears defended their tension, but they have not had a great opportunity for liquidity. I think what the bears need is the market to lean up and sample them. That's what they need. And unfortunately, a lean up right now also sabotages this daily test. If we keep moving higher, there's a chance that this could bring the daily up over zero further, and that's not going to look great for the bears. They did what I would call a pretty good job today. I think this was pretty good. You trapped in some legitimate bulls and dragged them on down until they all just got wiped. They were able to hit this position here, and you could see as it dipped down below that position, a lot of people just said, screw this, and you can see them dumping right there with tension. That's what that was. That's what was going on. They took out as best they could that major position from yesterday. And it's really interesting because they were able to dip this down into the close, ruin all the bulls' days, just totally take them out, move this up, take out all the bears along the way, and now we're moving down and taking out all the bulls who are holding from here. Does this sound like a theme to you? It sounds like a theme to me. The theme here is we're not going anywhere. That's the theme. We're just picking off whichever side has the most people. They're picking off back and forth. We took out these guys and these guys and these guys. It's almost like a widening wedge. We're getting wider and wider as we go. It's just taking out whoever's here. This isn't directional. And it's getting old, to be honest with you. So we get to this point where they're able to liquidate a whole bunch of people, these people in particular. And of course, whoever, if you held on from here, I'm so sorry. You're probably done trading, and it was nice knowing you. But these people, we can see it right there. Well, that led to a decay retest right here. There's the volume. It also led to a zero test right here with that volume. And the bulls picked it up. And there's their impact. Boop, they picked it up. They wanted it. But the market was a little greedy and said, we want to liquidate this decay retest. Let's go for their stops. Nailed the stops right there, trapped orders. So we have liquidity, liquidity, hit, hit. We have two bullish positions in the market right now after the destruction of basically all the bulls. The bears don't have a really strong liquidity sample using decay or velocity, either of these. There isn't one here for the bears. You could say this moved up positive right here, and that the trapped orders, which these happen about the same time, so it would be this group here. You could say, okay, well, there's the volume as a response, but I think after the events that happened there, that those two, I mean, that's a stretch. But you could do that. I'm looking at this because I like that these lined up really well. I think it was really clear that the bears came in and defended as best they could 30-minute tension. And then they used the bulls who trapped in to pump this down. And then the bulls started to fight back. And now tension is moving down, and we have this position here and this position here. Well, this one actually hasn't really been impacting tension quite yet, but you could see it's moving up. And I think what's happening here is the market needs to drift up and sample these bears. I think that's what we got to do. We got to see the market lean up, get the bears, and let's take a look. Hey, we've got some pretty strong bullish positions here that are coming into the market. I think they don't like what you're doing, but they're here, and I think we can see them. Are the bears going to keep defending this? Because once again, just like yesterday, their cumulative or net result so far has been, I don't know, not amazing. I mean, look at daily tension. They barely are getting it under here. And the bullishness, and bullishness is where that you have something that you highly expect, and there's just bullishness comes in. And a lot of the times that bullishness creates a lot of demand. And the reason for that is that bullishness is not picking up liquidity. So they're not waiting for volume to come in to help them slip in the back door to be a participant here without anyone noticing. Bullishness is where you come in and you do something overtly, where that you're just like, we need this, we want this, we've been waiting for it. And that it'll create a lot of demand because of the open interest spike. If you don't have retail traders on the backside of your trade, then when you open a bunch of new orders, it creates a bunch of demand. And it's obvious, the open interest spike. So you get these aggressive moves when it's sort of like, we just got to go. We can't wait for liquidity to show up or something like that. It's difficult because institutions only do that when that there's something, that requires a time crunch. It's like, you got to do it now. And I think these daily samples are good ones. If you don't do it now, if you wait for structure, you may lose control of the possibility space. And so you see bullishness show up. And I think that's what we're seeing right here. The response out of this, we did have liquidity. And then we're seeing bullishness coming in, and I think that's what's pushing this up. And we're waiting. And I think what the bulls are waiting for, in this instance is to say, we want to see the bears. We're going to wait to really impact the market until we see what the bears are up to, because this was a devastating day for the bulls. So I think that's what the bulls are doing. We have liquidity here. This is legitimate. It was a decay retest, but it was also a zero test here, and they did hit. So that's there. We do have liquidity here. This is the bears. They did show up right there. So these are our players for the most part right now. This is liquidity, but because it's not really quite impacting yet, I'm looking at this one for my marker. So we can mark these as our participants. You see that volume right there? So right into the close of it. And here, right there. So this is where our players are sitting. And so now we can take a look at what they're looking at and what's coming up next. We already talked a little bit about, well, actually, before we move to that, let me just show you, because I keep looking at this and I don't always talk. So the whole point of this thing is to track the impulse and counter moves. We get these sets together. They'll come in sets where you have an impulse, and that's when the VoLTE-WAP is moving. And you can see there was a strong impulse. And then the counter move is when it's flat, and then impulse, and now we're back to flat. So we've had, you could almost call this two impulses, but really it was just one impulse, a counter move, an impulse, and a counter move. And the reason that I like this is it gives you a lot of quantitative structure. We can quantitatively see that while this is moving, that's an impulse, and while it's flat, it's a counter move. And it helps you structure it in your head. You could say, I know this was a counter move. This was not a counter move right here. So not a counter move. Yes, a counter move. This was not a counter move. This was not a counter move. And it takes a few minutes, but when you look at it, you should be able to go, okay, clearly, like there were moments where it was sort of flat a little bit, but you can see this was the move. This is the counter move. And right up there at the high, we got an uptick, and you can see it turn green. And that was the spot when it came back down. And this is telling. It means that once there was volume that came in at that spot, the market responded back down. And it basically was here, and then we get it to move down again right into this move. You see that move down again. And this helps you just basically see volume at volatility. When you intersect volume and volatility together, that's what this is modeling. And it's using that as the coefficient. So this is a coefficient coefficiently weighted, which all moving averages are coefficiently weighted. It's just you're used to them being weighted by 1, unless you're using the VWAP. It's a coefficiently weighted average. But the coefficient that I'm using is volume intersected with volatility. And so it gives us a more responsive view of volume weighting because we're mixing that. So you can see it keeps up with price much better with the VWAP, which I don't even have up, but I can only imagine it looks something like this. And it essentially, once it pulls away, it's absolutely useless. This is not useful to see, other than it tells you that it's far away from the volume weighted average price. And so the whole point of this was to measure impulse waves and to give us an averaging model that will keep up with price during aggressive pricing like today. Okay, so we're on our second, so it'd be like the counter move number 2, and this would counter move number 1. So we could see this was essentially a two-legged move, essentially. And so that's the reason that I have this here. It's not necessarily something I trade off of. It's something that helps me quantitatively structure market pricing mixed with volume. It does not, unlike every other tool here, reference anything but price and volume. So that indicator will work on anything that has both price and volume. Even if you put it on a chart that doesn't have volume, it will just use a 1 instead of nothing. So it'll actually work on other stuff. But yeah, it's designed for this here. Anyway, so that's what that is, so that you guys kind of know what that is, and how I'm looking at it. Okay, so I think the market's leaning up here, so we're looking at rises, and I think a lean tends to have pretty good demand in them. And by demand, I mean there's implied demand, and markets love implied demand. What implied demand is when the market, using their very sophisticated algorithms, can see. So we're at time point 0, looks like 6. 0, and the market can see that at time over some price, that will create an increased delta of demand that is greater than the current demand. So we could see that at spot 2 will be greater than 1, and in fact, significantly greater. And when markets can sort of see this, they love to just reprice over to there. And so I expect this to be a pretty directional move up into a bearish sample. I think the market is seeing that as it moves from time 0 into the next point, which would be a sample, that we're going to have greater demand or lots more volume. And markets are essentially built on transactions. Why? Because how much do you pay in commissions? Here's an exercise you could do to learn how to code in ThinkScript. Open a ThinkScript, calculate the total volume of the entire futures market, multiply it by 2 because there's 2 sides, and then multiply that by whatever that the CME collects in fees. And you'll say, oh my goodness gracious, they're making billions of dollars a day in transaction costs. Why would you focus on anything else? And that's exactly right. Why would you focus on anything else if you can freely get almost risk-free transactions? Billions. Therefore, if you can collect billions, this is your motive. When you code or you codify behavior, boy, wouldn't you want to codify something that improves or goes after the thing that you want as the person who created this security. So of course, it's coded right into the exchange because they want the money because that's how their business works. So it's clear without even investigation, but you can do investigation and you should go to the CME. You can pull up their algorithm and the rules they use for how they price, figure out how they work, but I think if you think about it for just a little while, you'll realize that what they care about is making money, not fair pricing. They're not interested in fair pricing. They're fair as long as nobody complains. So there's a threshold of fairness. But the point is that you're going to obviously codify into your algorithm, you're going to encourage people to do things that cause more transactions. So of course the market goes to where demand would be because that's how you make money. If you just do that over and over all day, you can get from $1 to maybe $2 billion. It's insane. Go do the math. Pull up a chart, pull up the total volume, multiply it by 2 for both sides, and see how much the exchange makes in a day. See how much each futures contract makes overall. So pull up the ESM20 on Thinkorswim, get the total, actually pull up one that's expired already, get the total volume for the entire contract, including overnight, and add that up, multiply it by 2, and see what one cycle of a futures contract brings in. And then you could say to yourself, so for the futures exchange, they don't think day to day, they're thinking one full ESM contract, right? There's like 4 of them in a year. So we say, how much did the ESU19 make? How much did the ESM19 make? How much did the ESH19 make? Add those up, take the average of the ESZ, add those up, average them out and say, here's what they expect to make in money. And you could say, this is what those contracts are worth to them. So why does implied demand work? Because the contracts are fundamentally geared to make the people who own them money and transaction costs. So I bring that up because I think it's a sensible and natural conclusion to say, why would that work? It's not because of something magical. It's a fundamental aspect of business. So I think that a lean up into a sample makes sense because of that fundamental aspect of the business. So I call this a lean. So the market sort of needs to test a player. I say a player, but I mean like one side. And that need says, okay, well, we know you're going to sort of do that. Well, let's go there. And then it starts to reprice. And repricing is different than rallying. A reprice is where the market is fundamentally changing its mean pricing. We're offsetting something somewhere to allow the price to move to a new range without demand. Demand is a response from rallying. Repricing is a response from future implied demand. And repricing usually looks like this. This was repricing. These little pushes up and down are demand spikes. And this may have been from demand, and so it's something you have to look into, but this is what repricing usually looks like. You shift into like a new little box. And so I call that repricing, not demand rallying. So I think this is to some degree repricing. Okay, anyway, so that's where we are. We're looking at that. Now, what happens if the bears come in and hit? What are we going to do? Well, can these bears defend daily tension? I honestly think that at this point, this is almost, who cares? Who cares? Are you telling me somebody's on Zoom again? Oh my gosh. All right, let me report them really quickly. There it is. We got Tony Winkles. All right. We got Mike Oxlon. Sorry, guys. I'm reporting people on Zoom for coming in, inappropriately sharing their screen, and I'm reporting them for attacking Zoom. I wish they would just let me turn off screen or video sharing. I apologize to anyone who has to listen to whatever the heck they are sharing. Stop your video, stop your video. Okay, hopefully that works. I don't know. They'll let me mute someone, but not, and I can tell that they can't unmute themselves. Okay, I think they've just left. Okay. It's because by default, they won't allow me to not allow people to unmute themselves. I have to physically, every time I start the Zoom, remember to go in and say, oh, and people can't unmute themselves. I can't do that by default. I also can't by default say disallow people from starting their videos. So every time I start a Zoom, if I forget to turn a setting off or if I don't stare at it, it's by default attackable, which I think is just like, come on. Well, if I password protect it, then that limits anybody from wandering in. It's like this barrier to entry. And I don't want a barrier. I just want to shut off everyone's ability to do anything but look. I don't know. Okay, sorry about that. Really irritating. And thank you, Pablo, for telling me that that's seriously irritating. Okay. And now we have somebody literally in the YouTube trying to post stuff. I'm getting trolled on the YouTube too, but it's blocking their comments. I have the comments set up so that yeah, somebody's trying to post a whole bunch of stuff. Well, you guys are adults, right? So you can read your stuff. Okay, next thing. So what's coming up next? Well, the next thing right here is if we can get this to move up and we can get tension. So if these we want to get this to move up. And the thing I think that the bulls want at this point, what I'm thinking is that the bulls are saying, well, how do we get tension above zero and we get daily tension above zero? I mean, this is really the ultimate goal all the time. So how do we accomplish that? How can the bulls accomplish getting them over zero? And it's pretty straightforward. We need to trap in some bears and try and liquidate them on the other side, right? So if we can get decay up over zero, we can get velocity up over zero, then we can get some bears in there. And I think somebody was actually mentioning this earlier in the, yeah, I know there's people posting stuff in the YouTube chat. I'm just hoping you guys are adults and you can just ignore them. I don't know. I don't care. They're probably part of the bot. The bot people come in with the intent to divide, because one of the things that's really important, you know, we're not going to talk about politics in here. So they're adult. Hopefully they're adults. Hopefully, but you guys are adults. You can just understand that they're idiots. I don't know. So if we get this to pump up in and over zero, so we get those bears sampled into the close, right? If we can trap them in the last hour so that they're not performing well, then there's a good chance that on Monday we could move this up and get tension and everything back over zero, and it was just a big traumatic event. Now, if the bears come in and they're able to pick up some liquidity here, and they're pumping tension down, that becomes a problem if they can take out some liquidity positions. I think that right now we've got some root positions down here that have a lot of, I think they're probably pretty sizable, especially this one right here. This I think is the most important one. It hit, it impacted tension. If this gets moved down by the bears and they start getting those people upside down and they start using them to optimize profits, we run into big problems. So I think that there's a really good case for both sides. And this is sort of difficult. Which way do we go? And if you think that there's a declarative, clear answer, please share. I mean, I'm open to that, to information. From this perspective, I think there's really good cases for both directions at this point, because we've withered away daily tension. We've got 30-minute under. I mean, just from that point, you can say, well, if somebody comes in and really moves the market, this is set up to a spot where during Monday, we can get that going in a direction. And so, okay, sorry, I was just checking to see if anybody else had commented. The Bears could move this, the Bulls could move this. We could see either direction, and that's a big deal. I think right now that the Bulls were able to work out right here, were able to work out getting basically everything they wanted, and they were able to take out all those Bears. And as soon as those Bears got liquidated, we had something like open interest theft, where that all those orders were stopped out, and then they filled a position right there, and they had a setup for it, and that it basically the Bears came in as big a way as they could to pick up all that, those people getting wiped out. And the same thing's happening on the other side, where it pushed down, and anyone who's bullish probably got wiped out. And this is something like the exact same thing, open interest theft on this side. So we have these two areas, and I think that anyone trying to trade in here likely feels this way, that you're going, hey, this is how this works. So that's where we are. We're stuck in this range. We have a precarious internal possibility space in front of us. And it's really hard to tell until that we sample these Bears again. If those Bears don't get sampled and this tries to lean down again, I think the Bulls are going to be wanting to pick that up. They're going to be looking at that as opportunity to pick up the lows, to try and hold this up until we sample the Bears and it's clear. I think that moving straight down and just liquidating those guys without sampling the Bears first is going to be a problem. If it just pushes all the way down and out the lows, it's like, well, who did it? I mean, who pushed it down? I think that these guys shoved it down here and got what they wanted there. And then moving back up, I think that likely this came back down because the Bulls wanted to pick up this. It's not common to see it do it a third time, where that we have open interest theft to open interest theft to open interest theft. That's not very common. I think at this point, we need to lean this up, sample the Bears so that we know who could do stuff. And then at that moment, we're going to know what the state of the market is, and we're going to get a better idea who's going to be doing what. The ultimate goal here for the Bears, they need to get this daily tension further. This is pathetic. This is not going to run a trend. This is neutral on the daily. We got a bullish sample that looks to me like the Bulls are coming in. And now we're getting a little bearish sample here on a switchback. And the Bears are trying to come in, but they're not getting it back under zero. So I think that what's going to happen here is we're going to be moving up, and sampling those Bears is going to give daily tension a chance to rise. And I think this is starting to look to me like the Bears are running into problems. And we get there, we sample them, daily tension's further away from zero. And that means over the weekend, if there's not a big hit, like a really big push to get everything to come down and get daily tension down in a way that it can actually hold, then this is just going to rise right back up. And I'm pretty sure that we're going to be hitting like 315 on the SPY. We're going to be going whoop on Monday if that doesn't happen. I think that's what we're looking at. Essentially, and at least for me, and this is the opinioendo section. So this is what my opinion about what's happening structurally. That these guys did a great job, and this is essentially a deep pullback. That's how this looks to me. It looks to me like they did great. The Bulls got what they wanted. They took out the Bears, and then the Bears came in with all this force to do what they could, and this is a deep pullback in a dominant bullish position. And that's the way it looks to me. And that's just my opinion, in that it's a big statement to say that that's what all of this means. to make conclusions like that is a little more extrapolation than I like to, but my opinion is that that's what this looks like currently. For right now, I think that this is absolutely, and that's why I'm willing to say that's why I think that's my opinion, is because this is looking like sampling these guys is going to give them trouble with the daily tension, which is over the weekend going to give them trouble holding on to that because they weren't able to establish daily tension down. And if this opens higher, that there's a really good chance the market's going to want to keep going, run them out, and we'll be seeing new highs getting up to like 315 or so through this day's highs. That's what this looks like to me. So you're going to have to use your tools that you have, that you love, that work for you, and do the best that you can to take advantage of this idea. If you see these events and you see them differently, by all means, let me know. I mean, post and let me know what you see, what you think. Because for me, it's very valuable to have your feedback. I value that. I take it into consideration when people say things. Yes, I sit and read the Discord when you guys post trading comments. So that's what's going on here. I'd like to hear your feedback, but currently I think this is headed up and we're getting, so this kind of thing is repricing again. And if you're going repricing, we're moving up into demand. So the market says, I see demand up here somewhere. Let's move up to it, get that sample. And it's leaning up into that sample to try and get those people tested, see what we can find. What have you guys got going on? What's happening here? What do you got happening here? So let me color that one green. We'll say this is where the bulls are sitting right there at the end of that. Here's where the bears are sitting at the end of that. So you know that if one of these players wins and they establish something, I don't know, like if you're oh, this is interesting. So it's continuing. There's people coming in. I'm not, so this, if you ever heard of this, it's called the, an idea, the heckler's veto. So what's going on here is that I think people are harassing just anybody who posts stuff, and the heckler's veto is a legal term. And what it means is that if you have hecklers, they essentially can veto you, and that you get the people running things, and the hecklers try to modify the behavior of those who have something going on in an attempt to veto. It's a form of cancel culture. And essentially, I cannot respond to it because, in my opinion, it's a format of terrorism. I don't do it with my children, and I wouldn't do it with a bunch of immature adults. Is that responding to terrorism outputs a behavior that is significantly more devastating than a peaceful negotiation outputting the same response. And so hecklers attempt to take advantage of something in the legal system that I think is insane. You can't do that. You can't have hecklers vetoing your opinion or things you're doing just because they heckle. Free speech. They're saying nonsense, and they have the right to do it. Hopefully you guys can just see through it. It's crazy. I'm not like famous or anything. I have there's like 10 people here or something, 20 people. And they just keep going. It's called the heckler's veto. Anyway, so that's where we're at. Look, we're getting our lean is continuing to move. We're almost to a sample here, -5. You can figure out how much advanced decline to 10 people. Thank you. So up here, so we just take that 5, we multiply it by 20. Can you hecklers multiply 5 by 20? I mean, go ahead if you can. I don't think they can. Let's see if somebody types in the right answer. 5 times 20. Nope. Okay, Captain Green, you reported my stream and you disliked it. Great. So this is 100. So we can get 100 moving up here. So that's going to be, all right. Okay. I need an admin. I have an admin, somebody here. I can kick him. I can ban him. Uh, that's about it. Oh, you did? Okay, good. Yeah. Thank you. Thank you. Yeah. So, um, this is really interesting. I don't think Discord just lets you ban people or kick them. Banning them, they can't come back in. Kicking, it's like a punishment for a couple days. Anyway, so we're getting up to our sample here. You see that? Hopefully you guys just ignore the nonsense that's going on. They're idiots. So we're getting here. We're about to get our sample. So you can keep an eye here. We'll see that little box will turn green and that'll let you know it popped through. If it happened, so intrabar, I don't have the calculation here for intrabar. It does have it on this one. So it will calculate the high and the low of the actual values to capture these points. And once that happens, you're going to look for that trapped orders. And the whole objective will be to take a look right here to see if we can get that tension to pump down. I think if the bears get sampled, their eyes are going to be looking down, trying to get right down through there. If they can't impact tension, then what's going to happen is that the bulls are going to see them as a potential way to turn them upside down. Let's turn those guys upside down and pump the market up. So that'll be the goal. And the bulls need these bears to fail to hit, because if they fail to hit, then they'll be able to pump tension up, and that will assist in keeping the daily tension higher. But that'll help pump this up. Hopefully on Monday, we can keep that going and run this back up and get back through the highs and stuff like that. And essentially at the end of the day, this will look like, and many of you probably already noticed this, but it'll be an outside bar. And we'll have seen what a daily outside bar looks like with this analysis. You could see that outside bars on a daily outside bar like this there's a lot of drama, there's a lot of conflict that goes on. I would love to do that. I'm not sure exactly how to do that though. See, and this is the thing. I refuse to distrust other human beings. I think that human beings at their core are decent people, and this is just bots, and YouTube and Discord need to come up with algorithms that can deal with bots and organized malicious behavior. That's what they need to do. Luckily, I just post stuff. I mean, it's not like they're wasting their time. It's not devastating me at all. It's a little humorous, mildly annoying. Okay, sure. So these bots in there, and he just admitted that they're bots. Let me see. Yeah, see, he said we are real bots. So they're coming in. I don't know what their objective is or who's paying them, but whatever. I don't care. Well, I'm not going to restrict the channel. I'm not going to allow the hecklers to veto my open door policy. They want closed doors or whatever that they're trying to do. I don't know. Maybe it's teenagers having fun. Okay, I had fun in my day. I refused. I refused to close my door because of hecklers. I think that what needs to happen is YouTube needs better algorithms for. I mean, like this is pretty simple. Like typing or having the word reported show up 10 times in a row. It's like, well, clearly these are bots. They're bots. So anyway, I'm I'm just paying attention to this because I'm waiting for the sample to happen. Yeah, I don't think they are bots. But I would have to say that they are bored. We're almost there. Not quite there. Scamming. So well, we can talk. Let's talk about this. Valorant players, Lily, Lily, Lily. I think they think this is a gaming channel, and they have this is like a game. Yeah, I'm sorry. They're in here having their way with the channel for some reason. Okay, so we're looking here, and let's take a look at what's going on with the dollar. So you see the dollar is moving up a little bit, but we also have the interest rates going up a little bit. And that's telling me that they're sort of creating those debt dollars, the debt ones. And these have less impact. And when you fill a second position, we've talked about this, when you fill a second position, you should use debt, not equity. And the reason for that is that if you have a nice root position that's much farther down in price and then it moves up and you can pick up a second one, you should use debt to fill that because then you can get uh, a larger position with no extra capital resources. Um, so there's that. We don't have an inversion in play right now. Oh, you guys can see what they're doing. Just lots of copy and paste. So we still haven't seen our sample yet. It has not showed up yet right here. We're just waiting. And with the last half hour in the market, oh, did I stream my keys? I have to. Oh wait, no, those are the URLs. I didn't stream the actual key. Those are the ones they tell you to copy and paste everywhere. You guys think I should take out the Discord? How are people going to know how to get into the Discord? This is the most active my stream has ever been. 129 people. As I'm not sure what their objective is, but they've made me more famous. I'm becoming viral. Oh, is something going on Twitter too? No. Yeah, it's on Twitter, and that's typically where that they pick up the link is you post it on Twitter and somebody sees it. I've never had so many people in my in my Discord or my stream. So we almost got our sample. We haven't quite gotten that sample yet, so we didn't see it actually get over 0. I'm not famous. Um, yeah, interesting. I've never had so many 132 people. Usually it's like 21. Oh, are they back into the Zoom? Oh my gosh. What the crap? Human beings. I don't get it. It's true, you're right, but still 130 people. I mean, I got like never had that many people in here. It's gonna boost my video's ability to be seen. Yeah, I probably am. I probably will have to password protect things, and if you want to join, you're gonna have to send me an email or something. Yeah, that's what's going on. It's interesting. Change my glasses? Oh, because they're broke? You got that close? My goodness. The praise of violence. That's what's going on. What the heck? Down to 76. I lost all those viewers. Bots. Oh, okay. How do you shut down the video and audio? I can only shut down video. I can't shut down, or sorry, audio. It won't let me just say no video. I looked through the settings trying to get that set, and it wasn't. I could not find the setting. Let's see. Well, half hour left in the day. What do you guys want me to do? Should I just shut it all down and restart, password protect it? We just keep going if you guys just ignore whatever it is that they're doing. In the in the Discord, did he? You sneaky little turds. They're being sneaky. See, it's getting weird attention. So we're still waiting on that sample. Still hasn't showed up. Uh, and that's that. There's in the no, Diddy, I asked you in the oh, and you so I find you. You'd have to post something. I can't find you. Happy to ignore chat. That's what I'm doing, but I just want to make sure everybody, that's if it's driving you nuts or something. The Zoom, they're trying to pop in and out quicker than I can report. Oh, you're the, okay, that one's yours, right? There we go. And thank you. I really appreciate that. Okay, so the meetings aren't scheduled, but maybe I should schedule them. Video off. Yeah. Okay, so the we still don't have our sample, so we're just waiting. I mean, we'll just, I guess, sit here and wait. Oh my gosh. Gross. Yeah, we're getting right bound. Well, I think so. You're saying like closing 3,100, but I think the objective here is to try and see if we get those bears tested. We still haven't pulled up there. We still haven't gotten to that point where we can sample those bears with some liquidity. And that is, I think that's what the market needs to do. We leaned up here to try and lean into that bearish sample, but we haven't quite had it yet. So we're just sort of sitting here waiting for that to happen. And that's it. And watching people spam the chats and stuff like that. Oh, I'm sure there's a little bit of kickback on the Discord, but people are people. Still just waiting. So in the last half hour here, what's going to be happening, I think, is that we're looking for the market to figure out how Monday's going to go. My perspective for this is not necessarily where we're going to close. I'm not interested if we close up or down or something like that. I'm interested in how we can configure the market to look at Monday. And with daily tension right here, it's going to be getting probably a close near flat. And then on Monday, we could move the market and get daily tension up or down and see how we can do that. Uh, that's the configuration. I'm looking for configuration. If we can sample those bears right into the close, I think that would be the most difficult thing to cope with for most people, because that would mean that if we sample into the, we get right at the last bar, it gives us that, then you're not going to be able to say, well, we were able to see the bears successful or fail, and that means it's forcing you into this predicament of holding over the weekend. How are we going to work this out? Is it gonna pop higher over the weekend? Is it going to pop lower over the weekend? We don't know. And so I think sampling right into the close would be the most difficult thing to cope with when it comes to how to deal with the structure. So I think that's the most sensible thing to do for market participants, because it increases the difficulty level, and it's probably fairly easy to do. And thank you again for moderating that the chat. Anyway, so that's where we're at. I'm not sure that there's a really clear cut direction here. I think that the bulls have good reason to be positioned here, but I'm not sure that this is like super clearly like going to shoot up. I think there's a good precedent for it, but the bears really did pick up some open interest theft, and they were able to deliver a devastating blow to these bulls right here and take out as many as they could, even this position here. I think that was really tough to cope with. If anyone was in there and they didn't let go of their position and it started to come back, very difficult to deal with. So we have some bearish success in that we took out some bulls, and the bulls were unable to really hold this together. But the bulls didn't just walk away. It wasn't like they just said, all right, well, let's just let this go, and that tension pumped down forever. It effectively stopped once we were able to get that open interest theft, and tension has been sitting sideways. And I think the reason for that is because the bulls can't really pump this much higher without trapping in somebody to hold upside down while that we pump the market further. So we need to see that. And I think that's why the market's sort of sitting sideways here in terms of tension, is that we need to see what's going to happen here. Are the bears going to come in and hit again? Is this going to be a face-to-face conflict with the bears and the bulls? Or are the bears going to, step aside or get trapped in and let the market rise? Which one? We won't really know until that we sample those bears and see what they have to offer the market. So that puts us in a situation where it's not abundantly clear exactly what's going to happen. So you could think of this as if you have, this is time, and we're going over time, and you have clarity here. That right now, we move it up, but currently we have clarity sort of a little lower. Whether it moved lower or whatever, but it's lower. And what you really want is when clarity is a little higher. And this oscillates back and forth. Though it seems to me that clarity looks more like this, where that it has this time here, time when it's clear to time when it's, I don't know, fuzzy. That the time when it's clear is much less. It doesn't spend as much time in clarity as it does when it's not clear. And that's likely due to demand. So as soon as things become clear, demand comes in and moves us out of that state. So I think the clarity is a little bit lower right now when it comes to like, are we for sure going up or are we for sure going down? Because today really did take a good swing at the bulls. Now, I do think it's worth noting that the bulls basically defended the daily tension. They basically defended that. I think that's telling. We saw them defend it yesterday, and it led to some pretty structured stuff, and we're seeing it to defend today. So I don't think the bulls have just walked away. They haven't like thrown their hands in the air and said, well, we're upside down and this is never coming back. I don't think that's the state of the market. I think the state of the market is basically that that the bulls are willing to come in and participate and aggressive in a very big way. But on the lower time frames, there seems to be a lack of clarity. Maybe people are not quite on the same page. Maybe there's conflict. People's opinions are all over the place. I'm not sure, but I do think that right here we have a decent bullish position. I think there's probably still major long-term trend bulls sitting right here. A move down like this isn't going to take out somebody looking for a week or 2 week rally. Like they're not going to. That's not going to be enough to really wipe them out. But anybody who is chasing that, or anyone who had a smaller hand, would probably have a hard time. So moving up, I think that we don't really have any indications here that there is a strong set of bears coming in on a longer time frame. This was probably the first time it was the first time in a long time the bears got a chance to possibly defend daily tension, and this is about it. And daily tension is still -1, so we're still up over the line. I'm not seeing that as successful. I don't see that as saying, "Oh, Bears, good job." I see that as saying, "Bears, terrible. You really didn't do a great job." And so I think that this has an upward look to me. The Bears are not coming in and exerting themselves. They just took a really strong. This just looks like a really strong jab at the stops. So that's how I'm seeing that moving forward into this close. But this is going to be difficult because of the lack of clarity until we really get these bears sampled and we see what their intention is, and we can sort of look at that to understand what's happening. We're not going to get to really know how this is going to play out. The clarity is a little low until that happens. Yeah, there's not a whole lot else to do. Okay, I'll let you know if that happens. This forehead right here, this one. I'm not insecure, so I'm like they're saying stuff, and it's useful. At 3:45 on the bookmap. Hopefully, the turning on the machines to trade with those that you're seeing that showing up is an indication of somewhat of the lack of clarity and also the intensity. I think these are fairly decent sized positions. I imagine that's I see these as decent sized positions pushing on both sides, and having a little lack of clarity here, maybe turning on those machines might suggest that there's a fight going on here over who's gonna win this. But I don't know that it's necessarily clear, and I think that we have some low clarity here. So we'll see. Maybe we get tension close right at 0 daily tension, and that's a little bit of a bummer because I think you want tension to sort of move wider. The wider you have it, the more activity that goes on in the market. Maybe that's what it is. Yeah, and that's a tough one, like the quad witching. Like, how do we predict its impact? Yeah, almost. 3100 major gamma strike. Yeah, and we're just waiting. There was a response there. If that's a major gamma strike, people are responding. Probably has to do with the options coming in, rebalancing in preparation for that. But it looks to me like in the next 15 minutes, we're not going to get that sample. We're not going to see this. It got right up close to it. We're not going to be seeing this move up into the close. It would have to be a pretty aggressive move to make that happen. So we're probably not going to be seeing this happen into the close today. Theta theft. Explain yourself. Theta theft. That's catchier than open interest theft. Yeah, John was saying there's a pretty big expiration today in the chat, so I think that maybe that could be a big focus of participants taking a look at that, and maybe why there's a little bit of lack of clarity in terms of structure and what What's happening? The options expiration. The last minute. Yeah. Because a lot of people probably, if you're holding and you have that options expiration, that is, you see this move down is really going to make you sweat if you're in a call. I would assume if you're holding a put right now, you'd say, oh, good, into the close, it's going to drop down. But if you're holding a call, you're probably really sweating. You'd probably be dumping your call, which would which cuts down the amount of mouths to feed to the upside, especially with probably such a large group of people responding to everything that happens. All right, it's 3:50 Eastern. So get our 50 program, see what happens there. It was a move. See you later. Somebody's leaving the Discord. I'm just waiting. There's not much to really do here. The Bears didn't get a chance to get sampled. They didn't get any great liquidity throughout the day. They defended the times that 30-minute popped up. They were able to come in and defend that. The Bulls got a nice deep and there was a lot of liquidity here, and they defended daily tension. They were able to get it back up. It's moving back under, but we're looking about zero. So I think right here what's happening is we're sort of losing some of the steam. When you start to see daily tension flip-flop back and forth a lot, it could tell you a little bit about what's happening. And maybe I could do this and scroll back. We could find a time when maybe that happened. Hopefully this doesn't reload the chart. Okay, there we go. So we go like this. You could see right here. So we get some back and forth, and we start to see back and forth. I'm not really a big fan of that, and I think it tells you that we're losing that steam that comes into the market. And we're starting to see that back and forth, and then we can see some direction changes. And the same is true for both sides. I don't think that seeing it slow down indicates a reversal. I think it indicates that things slow down. So this popped down here, and then it was for a while, and then we got back up, and then back a little bit of back and forth, and the market had to reestablish something going on. So we see this occasionally. It's looking like the market's given us some back and forth, which tells me that when the players aren't coming in and aggressively moving it away and keeping it away, I'm okay with the test and then another test. That's okay. But it's that we got this test and it's sort of hanging out here. You really want to see it move back up and get strong again. Or you start saying, okay, we've got the participants aren't moving market wide in a way that allows those probabilities to be favorable on the daily time frame, longer term time frames. So that's kind of how I'm looking at this. A lot of back and forth tells me there's not a lot of clarity in terms of direction, or things are slowing down, and that can raise opportunities for the other side to come in and hit that, or for this side to just wait. But that's the issue that's going on here. That's why I think that the clarity has dropped down, where we need to establish the control here of somebody or the other. And really, when I say control, in terms of this control is going to mean trapping somebody in on the wrong side and then running the market, you know, running the market. Uh, I think that would be the best way to do this. Oh, I just realized. Uh, anyway, okay, so 5 minutes. So this is about where we're going to close. Okay, so looking at Monday, the very first thing that needs to happen, and I think this is important because we didn't get it today. Uh, the liquidity that happened today was just defensive possibility space, not official, or the way that I like to measure it, the liquidity that I like to look for. We need to sample those bears. I think this is going to be the most important event of the first hour of Monday. Sample those bears. Are they here or are they not? This will be the first thing that I want to see. If we can get bears to come in and have no impact, say it moves up to something like that, then I'd be more interested in a bullish position. I'd be saying, okay, well, if the bears are going to allow themselves to get trapped in, then the bulls can come in and use that position to carry them upside down and drive tension higher. If for some reason, say we had it move down, we sample the bulls, we get price, maybe something like that, and the bulls just do nothing, at that point, I would really need to see this come back up, sample the bears again. We need to sample those bears in either case. If the market's going to ride down or ride up, we first need bears. So keep your eye out for where bears are, where they could be, to know if the market's going to lean in one direction or the other, and give you a sample. We need to see those bears. In the first hour or so, I really, really, really need to see those bears, because I think that right now there's just not enough information. There's not enough participants here to drive this up or down. At the end of the day, bears must get sampled. We could just turn the bears upside down if the bears got sampled, and then it could just rally. We could like a gap and go. Because we have bulls into these lows, we kind of know what they want. We can see that they're here and they're active. So we could get away with not sampling the bulls because we have them here, but not the bears. So no matter what happens on Monday, you need to see a bearish sample. You need to see all the pieces where that they get the signal, the volume, and see how their impact is. You must have that on Monday. Outside of that, there's not much to do until we get that sample in here. The only way that I think you could be positioned right now, if you think that the bears are going to come in and be able to take daily tension down, and if you think that this hit right here that pushed out all these positions was good enough, I still think you shouldn't be holding short over the weekend. I think that you should be waiting to see if the bears are going to participate. I don't think it's quite ready yet. We don't have bears, so who are you trading with? If you had a position from maybe earlier today, somewhere through here, if you did pick one up and you're holding it, and you decided to hold it over the weekend, that could be good, maybe, but your risk is higher because you don't know. We don't know for sure that the bears are going to participate. They defended tension, but they didn't get liquidity, so it's a little frustrating. You're like, well, so are you here or are you not? So I think that this, if you do have a bearish position, you do hold it, there is some potential for you to take a pretty big move, because if this moves down and we see we're going to open lower and get these down, you're going to be able to take advantage of a really good move. But just remember, I don't think it's clear enough yet. I think we have bulls here playing, and they haven't stepped aside and they're not done, and that moving down would likely motivate the bulls to try and do something again. So that's what I think. If you have some sort of long, you're holding some sort of call, maybe from one of these positions or something like that, over the weekend, you're going to be in suspense until we sample the bears. We could open lower, we could open higher. I'm not sure that I have a really strong opinion about where we should or shouldn't open. You're going to be in suspense until we sample those bears. And you're essentially going to be trying to take advantage of the lean. You're saying, well, the market needs to move up and sample those bears. And I think of lean as a very short-lived type of trade. It's not something that's going to cause a swing. It's not going to drive multi-day trends. It's something that you just take advantage of the structure of the market. So if you're in long and you're going to hold over the weekend, your risk is a lot higher because your trade strategy is essentially just holding into a sample of the bears, and that's difficult. I can't say that the bears are going to be sampled here or there. I don't know. I'm going to be making my opinions based really on what the bears do once they do get sampled. So this is a tough position. I think the bears, I don't want to say this out loud. I think the bears have a little bit better chance than the bulls over the weekend. I don't like saying that because I'm not a big fan of the bears, but I think the bears have a better chance. They defended the possibility space. They look like they're doing better. The bulls are holding on to hope that we sample the bears and drive them out. And this is just a horrible trading strategy. Just you trade what you have seen, not what you see. So I think the bears have a better chance of getting this to gap down over the weekend. I hate saying that, so I'm not a bear. Yeah, and John says gap down Monday, bulls defend. I think that would be a really reasonable thing. I just don't like the Bears. I've never been a big fan of the bearish mentality, the way they operate and stuff like that. It was stuff like today. I mean, they have this just different way of playing, and I prefer to think like a bull. They're a little more structured. They have a little bit easier to read, and you can track them, and they'll give you time to participate. Bears just have this way of struggling and being awful, and then suddenly amazing, and then they're back to awfulness. So they're difficult for me to track and trade quantitatively. I think they're just sort of a pain. But anyway, so I think the Bears have a little bit better chance because they're not holding on to hope. They're holding on to people who likely are in very difficult positions. And they've gotten tension under here, and this is flat. So the potential here, they can totally pull this off. But again, I don't know because I can't say I see Bears successful or failing because we didn't sample them. I see the bulls are here, but I can tell that they're sort of precarious. They're like, yeah, we're here, but we need the Bears to screw up first before we can really pump this higher. So this is tough. I don't have a really good bead on what I think the market's going to do over the weekend. But I do think the Bears have a little bit better because the bulls are leaning on hope, and hope has always been a bad strategy to operate from. So those are my thoughts into the weekend and what I think is how I think this needs to develop. I don't think there's a clear direction, but the Bears have a little bit better edge, I think, just because of what the Bulls are doing. Outside of that, if you guys have some questions or something, I could answer or talk about that. Otherwise, I don't think there's much else for me to do here besides show up on Monday and we walk through the events. Then it was an interesting day. I will look into password protecting things because of the hecklers who showed up. Let's see. I'm a big fan of the open door idea. I really don't like to put any barriers between people showing up to participate, share, help, and because just a little tiny barrier could stop people who we could improve the community. They might have good feedback, or maybe this would be helpful for them. So I'll look into it though. Today was nuts. All right. Well, I hope this was useful. Send me messages. You get a hold of me on Discord or Twitter or anywhere if you have questions over the weekend about stuff. So Um, good luck, guys. I'll see you on Monday.